Hey, good morning, everyone. Hope everyone is doing well today. It is June 27th. Wow, June 27th. How time is flying. I feel like I say that every day. But June 27th, we're coming into the end of the month. We know some rebalancing is going to take place. And we got some news to cover today, right? The world's biggest monetary policymakers are descending in Central Portugal for the ECB's annual retreat on central banking. The conference brings together bank governors, academics, financial market officials, and others to exchange views on current policy issues. And this year's title is Macroeconomic Stabilization in a Volatile Inflation Environment. And they're going to discuss how to get price pressure back to target amid a fragmenting global economy, rapid changing um, market moves in energy markets, and Russia's war in Ukraine. So, in terms of price stability, speeches from central bank chiefs from the US, Europe, UK, and Japan will be closely watched naturally, as they are the largest economies coming together in terms of these central banking committees, especially after Fed Chair Jay Powell reiterated that more rate hikes are expected this year while inflation has been coming down in the US. It still remains elevated above the Fed's 2% target, with tech stocks and interest rate sensitive sectors coming under some pressure since his testimony to Congress last week. Markets will also get the latest dose of economic data on Friday. Coming into the PCE report, the price index is getting published, which is the Federal Reserve's favorite gauge of inflation. Remember that. So economies have far proved more resilient to rate hikes than originally had expected. We've seen a large bull rally here in the S&P, where we could be talking about moving into a bull market, or we might have already done that coming into the early start of 2023. With the Fed's benchmark rate now above 5%, there are several explanations for the phenomenon, ranging from pandemic era forces and tight labor market to wage gains and consumer spending. So it also takes time for higher rates to filter through the economy, with many economists still anticipating a recession over the next 6 to 18 months. So it's a very wide range. If central banks extend their hiking cycle, so the yield curve between the 2 year treasury and the 10-year treasury has even widened by more than 100 bips, making it the greatest disparity between the two instruments since 1981. The Bank for International Settlements, popularly known as the central bank of central banks, has recently warned that the far stretch of monetary tightening is likely to be the toughest. The easy gains have now been reaped, and the last mile is going to be the most difficult, said Claudio Borio, the head of the BIS Monetary and Economic Department. I wouldn't be surprised if there are many more surprises. Surprise, surprise. So far, equity markets have shrugged off the notion of an entrenched inflation problem, with the benchmark S&P up about 13% year to date, though the vast majority of the gains have been led by massive tech mega caps rallying aggressively and the AI craze. So this rally, I think, does pull back in 2023. I know Goldman Sachs, they're pricing in potential recession, and if that is the case, they're expecting a downside move in the S&P to 3,400. I think that's worst case scenario. I personally don't believe that we really revisit under 4,000 in the near future, realistically, and I think lows are pretty much in for the remainder of the year and could be in for quite a long cycle. So I'm looking still to buy dips. Realistically, I am currently bearish on the shorter term to see some of this downside, but I think that flips fairly soon. Excuse me. Biden has announced details for a $42 billion federal investment in expanding internet access for Americans, kicking off the new leg of a tour promoting the benefits of 2021 bipartisan infrastructure package. We're going to be able to connect every person in America to reliable high-speed internet by 2030. He declared the money will be released in stages and should provide additional incentives to big broadband providers like Comcast, Charter, AT&T, Verizon, T-Mobile, and all 50 states and some U.S. territories are due to receive funding, but one state clearly received more than the rest in terms of absolute dollars. But the thing is, I think that these names, right, they've been destroyed fairly recently. AT&T, Verizon, especially T-Mobile. They're really good dividend names overall. They still have some decent potential for the year into the next 2 years, the way as it stands right now. But overall, realistically, they have been beat down. I think they provide good dividend, and they could actually find some price stabilization into the next coming years, as the anticipation is to provide high-speed, reliable internet by 2030. Um, in terms of other news, there's one more thing that I do want to mention. Lordstown Motors, ticker symbol RIDE, has filed for Chapter 11 bankruptcy, sending the stock down 52% before the opening bell. The EV maker also sued Taiwanese electronics firm Foxconn for allegedly reneging its commitments, and began a sale process for its endurance truck and related assets. So that's just something to mention, right? One of the names filing for bankruptcy here. In terms of other news today, 9 a.m. that just went by, we had S&P CoreLogic Case Shiller Home Price Index. We also have today at 10 a.m. consumer confidence, new home sales, and Richmond Fed manufacturing that could provide some kind of market volatility. And then into the end of the day, results of a $43 billion 5-year note auction and a money supply at 1 p.m. So not too much news right now. In terms of what to expect today, some volatility can come out of the markets at 10 a.m. In other news, Meta launches VR subscription offering at $8 per month. Apple, Broadcom lose appeal over patent case. China Premier economic growth on track to reach 5% target. Blackstone BX weighs offers for for half its stake in Bellagio Casino, and some other news that's not super important, I guess. United Health to buy Emedicis in all cash deal. That could be interesting if you're looking at some of those health names. But all in all, there we have into the end of the week some news that comes out. Jerome Powell is expected to speak yet again, starting midway through the week into the end of the week, along with some of the inflation data. And to wrap this up, right, in terms of trade plan today, talking about the S&P 500 futures, we had a key area we talked about yesterday, 43.68. That was the low tick into the end of the session, sending prices higher by 20 points overnight. Now, a key area that we're going to have to watch is going to be 43.82. I would expect some kind of sell pressure to attempt from that region, but we have a huge buy level at this 43.68 to 70. This is where the strong-handed buyers are expected to show based on a distribution. The sellers would have to hold out two levels between the 43.82s and 84s, as well as the mid-90s, 43.93 to 96. Those are two areas that sellers have to show up today. Otherwise, we're going to start to see prices actually rally into probably the end of the week, depending on some of the data out of the PCE, of course. But today is very pivotal. I do expect those strong-handed buyers to try and hold that 43.68 as they did yesterday into the end of the session. If somehow that does break into the end of the session, I think this downside does continue for the remainder of the week with a potential pop rally into Friday. So I'm going to be watching to see if some bulls can come out today into some of those key resistances as we're holding right now. But with that in mind, we do have some slightly lower volume and volatility coming into the month end, where we do expect to see sector rotation and rebalancing in asset managers, meaning that we can see more muted volume sideways movement and just trade those very large levels, as we're about to do at TradeProAcademy.com's live futures room. So go check that out. Check out the website also. We do have a free futures course with a lot of resources available to you guys. If you go and check out that website, you'll see the banner on top. It's something that we've been working on for a while, and I wanted to provide everyone with the information to get started. So go check that out, and we'll see you guys in our live room starting in a few minutes. So thank you for watching, everyone. I hope everyone has an amazing Tuesday, amazing trading day, and let's wrap up the week on a high note. We still have a lot of week ahead of us. Trading smaller this week in anticipation that we do see a little more downside for some of these swings that we're holding. But other than that, ta-ta and chat soon.